Now, everyone will have their own unique way of trading because it really just comes down to who you are as an individual. But if you're confused as to what kind of trader you are or which style that you would prefer, it may be more helpful just to understand the different styles of Forex trading. So in today's video, I will be briefly going over the 4 main styles of Forex trading in hopes that it will just help you figure out what kind of style that you prefer based on your personality. So keep watching. What is up, guys? Candice B here. Thank you so much for coming to my channel. Welcome back to my subscribers and welcome to my new ones. I just want to put it out there right off the bat that you don't necessarily need to classify yourself as a particular kind of trader. This isn't some sort of prerequisite for Forex trading. I have gotten asked a few times about what type of trader I am, but to me, it honestly makes no difference whether you're a scalper, a swing trader, or whatever. What is more important is understanding who you are at your core, and instead of trying to change yourself, just adapt your trading to who you are. Some people may naturally fall into the category of wanting to hold a trade long term. Some may just want to be in and out of the market really quickly. It all just depends on that person. However, I still feel like having a general understanding of the different styles of Forex trading can really help you to become the type of trader that you want to be. Now, as a disclaimer, the information in this video is just based on my personal interpretation of these trading styles. In no way am I saying that I'm an expert at any of these trading styles. I just simply want this video to be a resource that you can refer back to if you just want a summary of the key points. Now, understanding leverages, how currency pairs move, amongst other factors, are also imperative in understanding different trading styles. So make sure that you do your research. And for those who are less visual learners, they prefer to read their information, I recommend that you go to babypips.com because it gives a really good breakdown of the different trading styles. And there are also a few personality tests that you can take on that website, which is pretty cool because it'll help you just to figure out what trading style suits you best. So like I usually say in all of my other videos, just take this information with a grain of salt. S'il vous plaît et merci. Now, like I said, I'm just going to be discussing the 4 main, most common trading styles. Now, keep in mind that these trading styles can have categories and subcategories amongst them, so it can get a bit detailed and a bit complicated, but for the sake of this video, I'm just gonna keep it basic, gonna keep it straightforward. It's okay being basic sometimes, okay? We like to be basic sometimes. Okay, so the 4 main trading styles that most people are familiar with include scalping, day trading, swing trading, and position trading. Now, what is a scalper? I'm sure most of you have heard this term before, but a scalper is essentially someone who just takes short-term trades and they are in and out of the market quite quickly. When I think of a scalper, I think of someone who just opens and closes their trades within minutes, and their goal is just to take little pieces of the market, and that's pretty much it. And because they are so quick to be in and out of the market, it is likely that they will take quite a few trades in the day, but again, it all just depends on the person. Ideally, they trade during high volatility times, so for example, the New York Open, and they mainly focus on those lower time frames like the M30, the M15, even the M5, because they want to see as much detail as possible so that they can also get the best entries as well. So because they take such quick trades, scalpers are more likely just to stay in front of their charts as the trade is happening, just because they have to be able to quickly react to that market information. And to be honest, they may miss a really great scalping opportunity if they're distracted or if they're away from their charts for a period of time. So they're very focused, they're very zoned in. But once they have found that ideal opportunity, they go ahead and execute, and then they exit the trade, and then they're done. So I know this can sound quite enticing to some people, but just keep in mind that it takes a very skilled person to be patient and have very strict discipline just to not enter any trade that they see. This type of trading style can be pretty beneficial to those who just have a lot of time on their hands. You know, they don't mind sitting at charts, they have nothing better to do, and they don't mind just waiting for an opportunity. Because you will notice that the majority of the time, like 99% of the time, you are just sitting and waiting for the opportunity to present itself. It will most likely take you less time to actually be in and out of the trade. So although scalpers do not stay in trades for too long, they do have a lot a lot of patience and discipline, and they do not enter a trade without having multiple confluences. And I would say that this trading style is more desirable for those people who literally cringe at the idea of holding a trade for hours or even overnight. Scalpers definitely know when to close a trade, and they are disciplined enough just to take what the market gives them and get out of there. And I know that I said that there are subcategories and whatnot within each trading style, so I'll just point out that, for example, a scalper, they may see an opportunity that they can take their scalp and turn it into a swing. So there are those type of scalpers as well, so keep that in mind. They can take a small opportunity and make it a big one. You might have heard traders mention that term scalp to swing, and that's basically what they mean. So it really just again comes down to the goals of that particular trader and who they are as a person. The next style of trading is day trading, and the name itself is pretty self-explanatory. Day traders just pretty much place trades within the time frame of one day, and they also go by the name intraday traders. Now, because Forex is a market that can be traded 24 hours a day, 5 days a week, technically speaking, the market doesn't close within that time, but of course there is the time when one trading day comes to an end and another day starts. Basically, the objective of a day trader is to be out of their trades by the end of the day, which is 12 a.m. GMT time or 5 p.m. Eastern Standard Time. I personally don't really classify myself into a particular trading group, but if I had to say, I would say that I'm closer to an intraday trader over the other styles of trading. So with intraday traders, because they can be in the market for an entire day, it is necessary for them to focus on the direction of the market during that time. So looking at time frames like the H1, the H4, the daily time frame can help intraday traders to form their analysis and make a decision as to whether they plan to buy or sell. Once they have made their decision in terms of their bias, then they just simply wait for the best time to enter the market. They set their stop loss, they set their take profit, and then they just let the trade play out. Now, one thing to keep in mind is that a day trader is more likely just to find one really high quality trade and just let it run for the day. But not to say that a day trader will always only take just one trade and leave it running for the day. They can be in and out of the market like a scalper, but it's just that they're not opposed to holding on to a trade for a few hours while it plays out, and they definitely will not take as many trades as a scalper would. So because it may take a few hours for their trade to play out, it's not really necessary for a day trader just to sit at their charts. Like I said before, they just set their stop loss, they set their take profit, and then they're really good to go. So it goes without saying that as a day trader or a trader in general, it is important to have a good stop loss with some breathing room, because you just want to let the trade play out. You don't want it just to be so tight and then the trade can't just do its thing. So this type of trading style can definitely be beneficial for those individuals who enjoy using kind of higher time frames, but they still don't really want to commit to staying in a trade for a long period of time. Because technically speaking, even though a day trader can stay in a trade for a whole day, that's still considered short term in my opinion. And this type of trading style can be beneficial to those individuals who might not have as much time as scalpers to be in and out of the markets, but instead they just devote some time to find a really good setup or two, and they're content with that, and they just monitor it throughout the day. So me personally, because I like to trade that London, New York overlap, and it's pretty early in the morning because I'm on Eastern Standard Time, I'll just wake up, look for a trade around 4 a.m. to 7 a.m., and then I'll just let that trade play out throughout the day. The next style of trading that I will be discussing is swing trading. Now, with swing traders, they are more likely just to hold on to a trade for a few days or even longer. It all just depends. But basically, swing traders are longer term traders who prefer just to follow a trend, and they will hold their trades during that time as the trend plays out. And this type of trading style is definitely beneficial to those individuals who like looking at the bigger picture. They don't get too hung up on what's happening in the short term. They prefer to see what's happening on a larger scale when it comes to price action. So of course, using higher time frames like the daily and the weekly are definitely necessary for them to understand price's intended direction. And you can definitely say that one of the main keys to swing trading is being able to identify those swing high and swing low points. What I basically mean by that is that swing traders may keep an eye on those price points where price looks overbought or oversold, and that indicates that a reversal might be happening. Having multiple confirmations, especially on the higher time frames, is really beneficial to swing traders because it allows them to get really good entries and as a result have a really good stop loss with some space in between, so that if that stop loss ends up getting hit, then it's a clear indication that that trade was invalid. Now, of course, it is inevitable that there will be points of drawdown regardless of whatever trader you are. It's just a part of Forex, but it's especially normal for swing traders. There are so many different approaches to swing trading, so I encourage you guys to do your research if you find this style of trading appealing. Now, timing and good entries are very important to swing traders, and it might be beneficial to understand the fundamental analysis side just because it shows more of a long-term effect on currency pairs for the most part, but usually technical analysis is still the main focus of swing traders. This type of trading style is also more desirable for individuals who really just do not have the time to look at the charts so often. Now, of course, like any trader, they will check their trades once in a while, but really swing traders trust their analysis and their risk management enough just to let price do its thing. Now, of course, because risk management and trusting your analysis is very, very important with Forex, we as traders should always aspire to do that. And swing traders might find it more appealing to trade those liquid pairs just because when those pairs are ready to move, they move. Now, the final style that I will mention for this video is, of course, position trading. Now, let me tell y'all, this is some next level of trading, okay? Because these traders hold trades for weeks, for months, for years. They are crazy. Crazy to some, normal to others, I should say. And really, the perspective of a position trader is just different from the other styles of trading. Using the monthly time frame is, of course, a prerequisite for position traders, just because it is the highest time frame that you can view. And I guess you can say that this type of trading style is more so beneficial to those individuals who are taking a more long-term investment approach to Forex, just because of the idea that you are holding trades for very long periods of time. So just being well-versed in fundamental analysis, interest rates, the health of an economy, changes in government policies will really give a position trader an edge. I can only imagine how the patience and the resilience is unbelievably real for a position trader. I haven't met one personally, but I would honestly love to meet one and just pick their brain as to how and why they choose to be one. Because honestly, I need to find that patience in life. And although trusting your analysis is so important for any trader, just imagine how much a position trader has to trust their analysis. Just think about it. They have to have very wide stop losses, of course, but at the same time, their profit potential is insane. So it's really just subjective when push comes to shove. But yeah, those are essentially the 4 main trading styles that you will come across in Forex. And of course, keep in mind that there are various approaches and strategies, so you can't just look at it in this linear way as I kind of made it seem in this brief summary video. And also keep in mind that whatever trading style that you affiliate yourself with has no direct correlation to how well you do in Forex, and one trading style is not superior over the other, just like how one race is not superior over the other. Hashtag Black Lives Matter. Thank you guys so much for stopping by to watch this video. I really appreciate it, and I hope that it was a beneficial resource in your research. And if you enjoyed this video, you know what to do. Go ahead and like this video just to let me know. Also, feel free to comment down below. Let me know what trading style that you prefer, or if you have any points to add to any of the trading styles that I mentioned. And last but not least, do not forget to subscribe so you know when I post another video. And in the meantime, feel free to check out any of my other videos on my channel. I appreciate y'all forever, and I hope you have a great day, week, and life. Bye!